So basically,
Okay.
okay, all right. So basically, what I wanted to know is, like I sent you, um, I'm trying to trade the daily candle, understand how the daily candle moves, and see if I can trade the daily candle. And also, I wanna, I wanna, be able to also trade the
Okay.
sessions as well.
Mm-hmm.
Yeah, and basically the two pairs I want to trade is US 30 and gold.
Okay.
But
So
I wanted to ask you
mainly you
one
trade
one
US
question.
30 and gold, right?
Yeah. But I wanted to ask you one question.
Yeah,
Your
sure.
Discord, you don't add US 30. I think you should add US 30 because it's a very nice pair to trade as well.
Okay, I will add. Actually, s- very few members trade in US 30 and S100. That's why I did not add. But okay, I will keep in mind and sure, definitely I will add in the Discord.
Okay, all right.
Okay.
All right. So what I'm saying is just go random, maybe December. Let's start from any random place and let's just work our way.
Okay.
Yeah, just work our way to present day anywhere.
Like this.
Yeah, it's fine. It's fine.
Okay, perfect.
Because I'm sure as you go along, the questions will come
Mm-hmm.
as you go along. Yeah. Right.
Okay. So uh, mainly you are trading based on a previous session high or low as a liquidity and session based trading, right?
Yeah.
Okay. Okay, perfect. Actually, based on session based and based on daily candlestick as a liquidity, you have to simply mark the previous day high or low as a liquidity in terms of the candlestick, previous day candlestick high or low. And when you are buying or selling based on only session based, then you have to follow the like any time frame, like at least M15 and M5 time frame structure, and then follow the previous session high or low sweep, and sometime market taken out the inducement for the continuation. So this process will be applicable in during session. Okay, but during the previous candle high or low marking as a liquidity, so we can mark them. So first of all, look at this one. In this case, if you want to mark here based on previous day high or low as a liquidity and marking that market momentum is a bullish, and what we are looking here. So right now you can see everything is a bullish here, right? So when market momentum is a bullish and mark the previous high, so in that case, how we can deal? In this case, simply we can deal if market break the previous day high as a liquidity. Technically, this is our high. Okay, so this is our previous high right here. Okay, so when market
Right.
break the previous high, so we will not get a very like a downside move because the market momentum is a bullish, right? But if market break the previous day low, then we will get a very good trade for the buy because the market momentum is a bullish, right? You can understand something like this. If market momentum is a bullish and break the previous low, then we can expect a larger move to the upside, right? And same thing
Yeah.
applicable in a bearish market. If market momentum is a bearish and taking out the previous high, then we can expect a downside move. So this is become high probability trade for the sell, and this is a high probability trade for the buy. Okay, so these process will be applicable here also based on previous day high or low as a liquidity. So this is our previous day high, and this is our previous day low. This one, right? And if I want to ask you here, if market break the previous day high or low, then what time frame we should follow to continuation to a reversal? We use mostly a 15 minute, as you know.
Okay.
Yeah, because we are using daily time frame, right? So in this case,
Mm.
everything is a bullish, right? In a daily time frame structure, it means if market taken out the previous low and create a chalk, then we can expect that market can continue go higher, right? But if
Right.
market break the previous day high right? And then create any chalk. Then we can expect short-term sell, okay, till this low,
Right.
right? So this is a process to marking the structure, and this is a process because market momentum is a bullish. So basically, we are looking here for the buy. So simply, if market taken out the previous day low, then we can buy. Otherwise, if market continue going higher high, then we can follow simple like this. Okay, break high, and then taken out the inducement, and then we can expect continuation to the higher like this.
Okay.
Okay.
Right.
Okay. So let's see what happened next after this one, and then we can decide what's going on after that one. Okay. So in this case, market break the previous high. It means market grab the liquidity. I'm sorry. Right here. Okay. So if market taken out the liquidity means previous day high is a broken. Every previous candle high or low act like a liquidity, right? And when market momentum
Okay.
is a bullish or bearish, it doesn't matter. Main thing, the previous day high or low act like a liquidity because a lot of people are interested for the buy and sell on a like previous day high or low. Why? Because when market break the previous session high or low, then people are interested for the buy and sell immediately. Why? Because they are expecting that market break the previous high, then market we can expect a continuation to the upside and reversal to the downside. So these type of things happen during, right? Okay.
So when it breaks it, are you looking for sweep or you're looking for body break?
Actually, when market break the previous day high or low, then in that case, market not confirm that this is a sweep or closing because candle closing and sweep will be confirmed on a next day because it's like a time, as you know, to complete a complete candlestick because we
Okay.
are using daily
Okay.
time frame. The previous day candle
Right.
high or low on the current candle, present day, we can't define that this can be a closer or sweep. This will be confirmed after closing, which will be next day.
Okay. So we can assume that where we are now, we've started the next day, isn't it?
Yeah.
The next day. Okay.
Okay. So right now we can see everything is a bullish. Market momentum is a bullish. Market break the previous high. So when market break the previous session high, it means we are looking here for the buy, and we are looking for the buy after taking out the inducement, not for the sell. Why? Because we can expecting that market taken out the inducement. After taking out the inducement, probably we are looking for the buy because everything is a bullish right here. Taken out the inducement, and after taking out the inducement, you have to identify where is our PY. PY can be your order flow, order block, imbalance, right? So in this case, you have to identify where is our unmitigated order flow, order block here, right? Look at this one. This one is our last selling move before this buy, right here. Let me change the color. Right. This is the last selling move before the buy is here. Right. But if you want to refine this zone, then you will see this is our actual order flow is here. The last selling move before this buy. Okay. Because just below it, you can see there is no unmitigated order block, order flow, or anything here. We have only two, this
Right.
PY is here.
Yeah.
Okay.
Yeah.
And also, if price type here, and you can like switch here in a different time frame if you want a more refinement. Otherwise, this is our entry point here, right? And you can take also like single candle order block as a confirmation because this candle close over it right here. Okay.
So what I want to know is when do you know that you have to use order flow, and when do you know that you have to use order block?
Okay. Actually, when market after break the structure, you have to first of all you have to identify the order flow. Order flow is a primary, and order block is a part of the order flow, right? So
Okay.
main thing is order flow. If all order flow is mitigated, in that case, you have to identify order block.
Okay.
Right?
Okay.
Okay. So this is our entry point based on single candle order block because market type here, and target based on a target, you can set the previous high as a target, and also you can take help with a Fibonacci level point here, top to bottom here. and the 1.618 is our target here, right? This is our like target based on rally here. Okay, something like this.
Okay.
Because break-off structure, after break-off structure, taken out the inducement, mitigate your PY, and we can expect that market can go higher because this is an impulsive move, right? As you know, this is a corrective internal structure here, and this is a pro-trend internal structure. And again, we are looking here for the continuation to the upside. So this move can we go higher, right? So we are looking here for continuation to the upside as per our plan. Okay. And also, if also one more thing I want to mention here, you can also buy based on chalk or flip as well as here.
Right.
Okay. So in this case, this is our previous structure low, liquidity taken out. When market taken out the previous low, it means liquidity already grabbed here. So what we can expect? We can expect if market break this high and create chalk, and then we can buy here directly without any inducement, right? This is a called liquidity sweep entry module here. So look at this one, the previous high act like a chalk. So this is our chalk here. And after chalk, what we can expect? We can expect that market looking like if market came back a downside, mitigate your PY here. So PY basically this order block is mitigated here. So we can refine this one. Okay. And buy limit is here, but you have to put the stop loss just below it and target are same here, right? So basically we have a two entry here. If someone miss a first entry, so we can add another entry is here, right here. Okay.
Okay. Okay. Yeah.
Yeah. So if price came back another is here, okay, which is mitigate here, right? So this entry is mitigate here, and we can expect the same target and same plan is here. Okay. So let's see what happened next after this one. Okay. All right. Okay. Market going higher high. Okay. Finally, market hit our target as per our plan. Right. So this will be our target based on a plan, because the market follow the structure, taking out the inducement, mitigate this one PY and create chalk entry module here, and we can buy here to the upside. So this is a process to apply in a based on previous day high or low as a liquidity, right? Mark them and identify them. Okay. So this is a continuation trade here.
Okay.
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 Yeah. And also we can buy here based on like a previous day high or low, like sweep and taken out. So this is our previous day high or low is here, right? So let me mark this one. Okay. You have to wait for it to taken out the previous day high or low as a liquidity. Then we can identify where is market going on. Right. So the previous day low is a taken out. And after taking out the previous day low as a liquidity, then we can see you have to wait for it. First high is a broken, which act like a chop, not inducement, because the market momentum is a bullish and first high is a broken. That's called a chop right here. Right. So after chop, we can expect that market can go higher. Okay.
All right.
And after that, we can buy here simply. Okay. Let me show you through, daily time frame first. Then we can see what happening here. Yes, exactly. The previous day, like low is here taken out, and technically this one, right? The previous day lows are taken out, and if we can see if market create here any opportunity here, then we can buy to the upside for the longer term perspective, right? Why? Because market break the previous low and market momentum is a bullish and taken out the previous low. As I mentioned in a starting, that if market momentum is a bullish and break the low, and then we will get high probability at this point. So happening here.
So
yes.
Question.
Yes.
Question. So what we are saying is that once the day starts, if price, if the day opens and price goes that because if the candle open, let's say there's a consolidation or whatever, it opens, then it goes straight to take out the previous day low, like as we are seeing here.
Okay.
Yeah. Does that mean that that is that has created the low of the day?
Yeah.
Once it takes it out and gives you chalk.
Yeah.
But how about if maybe the first chalk, like you say in your lessons, is a fake chalk?
Now, actually, those fake chalk can be applicable while you are marking the based on structure. If you are buying,
Right.
selling based on structure, then those
Based on
chalk may be
structure.
applicable. Yeah.
Okay. So what you're saying is if you're trading based on the daily candle, then what you're looking for is a high or low sweep.
Yeah.
Then you look for a chalk.
Yeah.
Right?
Yeah.
Then you look for your entry.
Yes, sir.
So when you get the chalk, then you wait for the inducement taken out, right?
Yeah, of course.
After you look for your inducement taken out, then you take your entry based on a single order block, a single candle order block, or
Yes, sir.
flip.
Yeah. Price must be taken out the inducement, either market also market can be sweep like the previous. This one is a high taken out in 15, taken out inducement, and then we can buy here, right? So this is a process to buy. And also we have a one more position, like possible scenario here, like previous sweep the structure here. Like this is a sweep and market go higher, create chalk, and again push downside and mitigate something here. We can buy here without inducement. Why? Because market already grabbed the liquidity here, right? In this case, price close below it. So if close below it, so we need an inducement. Okay.
Yeah. But what if it breaks it to, let's say, to the downside? Let's say this present candle, it breaks it to the downside, but the move was so strong that it keeps going. It doesn't give you any chalk yet. If it doesn't give you any chalk, what do you do? Like it takes long. Let's say in the morning, let's say London session, price really moved. It cleared out liquidity previous day, but it kept on going with a heavy momentum.
Yeah.
Kept on going. And let's say by New York session, it's now creating your chalk for you.
Okay.
Doesn't mean that you join it, you still join it to the upside.
Okay. You mean without chalk market continue going rising upside?
No, like where we are now. Let's say the candle that we are now. Let's say for just for teaching purposes, the candle kept on going. You know, there's a sweep, like there's one that it just sweeps or whatever. Maybe breaks it with a candle and immediately creates chalk. Okay.
Okay.
That I can understand. But sometimes, let's say it breaks it, but it's with heavy momentum. It doesn't create any chalk. It just keeps breaking the structure to the downside. Maybe the whole of London, it just kept breaking it to the downside. Then maybe during, let's say, lunchtime, that was when it created a chalk for you. Can you still enter for the up move?
Yeah, we can enter. Actually, market grab the previous level as a liquidity, and then market create any reversal indication, then we can sign for the buy.
Okay.
Yeah.
Okay. So if it doesn't create chalk, then you can't go in for the buy.
Yeah.
Okay.
Okay. So this one is our previous low as a liquidity at this point here, right?
Yeah.
So basically, when market break the previous low as a liquidity, then we are looking here for the buy. And which point we are looking for buy? On the first point. At least if market take this one, so this will be our chop right here.
Okay.
Okay. So now let's see what happened next here. And as you know, market close below it. So technically, we need an inducement before the buy. Market created chalk here. Okay. And now we are looking here for the buy after taking out the inducement. So in this case, generally, where is our inducement? This pullback, right?
Yeah.
So once market taken out the inducement, then we can go like higher to the upside, and just below it, we can see one more order block is here, right? Okay.
Yeah.
So if market came back or downside, and then we can expect a continuation to the upside. Okay. And let's see what happened next after this one. Okay. Okay, market continue rising to the upside and market not mitigate your any PY as we mentioned here. Okay. All right.
So has the inducement changed?
Yeah,
Or because the top is swept the top
exactly. But
when
PY will be
price
same.
okay.
Yeah, because just below it, there is no unmitigated PY. But technically, you will see here, the order flow is already mitigated here by this pullback here. You can see, right?
Okay.
Yeah. So
Yeah.
technically, in that case, what happened? If market mitigate your PUI or anything, then most of the time, what happened? Price either sweep the main low or market create a clear one more or pullback. Like for example here, like can we go higher, taking out the pullback, and again go higher to mitigate unlimited order flow, and then market went up to the upside, right? So when market create a valid order flow, then most of the time your price will be react from your order flow. Most of the time, right? Okay.
Okay.
Okay. Oh, I'm sorry. Very fast. Okay, it's okay. So what happened here? You can see the market went up and downside, and this order flow is already mitigated here. But if you buy here based on order block, right? This is a valid loss here at this point. Okay, because
Okay.
yeah, we are buying here at this point, but price push downside aggressively and hit your stop loss as per this plan, right? But you will see one more thing here. The market break the previous low is here,
All right.
right? So it means liquidity already grab here. So in this case, this entry become like again valid setup for the buy to the upside. Which point we can buy
Yeah.
here? Look at this one. The first high is a broken, that's called chop. So where is our first high? This one.
Okay.
This
Okay.
point become our chalk here, right? And after chalk, what are we are looking here? We are looking here for buy. Okay. We need inducement
Yeah.
or
Yeah.
no?
No, we don't need an inducement.
Exactly. We don't need inducement because market already grabbed the liquidity, and in this
Already
case,
grabbed the
directly
liquid.
we can buy here at this point. Simply.
Exactly.
And put the stop loss just below it. And your target will be we can set based on out of like Fibonacci level, like, and also the previous high low, sorry, previous high as a target at this point here, right? So basically we have a two way to identify your target. First one is based on previous high or low, and the second one is here based on Fibonacci point, like the top to bottom is here, which is almost similar here, right? So uh, this is a set target is here, okay, which is a perfect at this point. Okay, let me this point, right? And let's see what happened next here. Okay, market mitigate this point. And one more thing is here, if someone wants to like scale one more position here, like press type here and create a single candle order block, then we can use multiple position at this point, because this candle grab the liquidity is here, right? And then
Yeah.
we can add multiple position at this point, but you have to put the stop loss just below it and target also same here.
But the next candle hasn't closed above it.
Yeah, still not close above it, but if close, in
Okay.
that case we can
If
use.
close, okay.
Otherwise, no. Yeah, of course.
I get you.
Okay.
But
So
can you show me your Fibonacci levels? Just show it on the screen and later I'll try and
sure.
later I'll pause the video and just try and do the same. No, with the settings. Go to the settings so that
Okay. Sorry. These are setting you can apply on your chart.
okay.
Okay.
Okay, that's fine. Yeah, later I'll do it.
Perfect. And based on it, this is our target 1.618 here. Okay, not there. This one. Right. So it means if price create something like this, so we can expect that market continue go rise to the upside till this 1.618 level as a target. We don't use Fibonacci level to entry. Okay, we just using as a target point. Okay,
As a
to
target,
identifying,
yeah.
because market momentum is a bullish, whereas there is no high or low right now. So how we can identify where is market going on? So we can simply use Fibonacci level to identify our target point, right? Okay,
Okay.
so let's see what happened next after this one. Okay, market in a ranging right now. Okay, finally market continue going higher high. Okay, all right. So finally market hit our target point as per our plan, because everything was bullish as per our plan, and market gives a reversal indication, as we know, and then we can expect continuation to the upside. So the first loss was created here at this point, right? This was loss here. Okay.
From what
And the
I'm
rest to
seeing,
trade,
even when there's a loss, it actually tells you a story
yeah,
about where market actually won. Because if you all liquidity has been grabbed, then you actually know where market wants to go.
yeah,
Okay, let's do one more candle and we go to the sessions.
yeah,
Let's do the previous day. So let's go to the daily and do one more candle.
sure.